guys to another video, and in this video I want to spend the time talking about break of structure or break in market structure. Now in trading you will come across this term quite often, right? As break of structure simply means a change in price action movement of price pushing um, above or below support or resistance areas in the market, right? So there are actually two types of breakout structure, and we're going to look at each in this video. So we have what is known as a continuation breakout structure, which is this image over here is depicting that of a continuation breakout structure. So as the name suggests, continuation breakout structure. It means that price action movement is continuing in its original trend, but at the same time, it is breaking structure. In this case, it is doing that to the downside continuously, right? So breaking structure to the downside continuously by, you see the market pushing from highs, taking out support areas, right? Pushing down, pulling back for the retest, right? Again, another continuation breaker structure right here. So the market pushing down, taking out support, creating low or lower low, right? Pulling back, rejecting that area, and market is still pushing to the downside, right? So this is an example of a continuation breaker structure where the market does not change its original trend, and we're still maintaining, right? We're still maintaining structure, but at the same time, in order for the market to push from a lower high point to a lower low, we have to take out structure. Where is the structure? Right at support right here at this previous lower low point. Right? So we keep on taking out those structure and maintaining highs and pushing to the downside. That is an example of a continuation breakout structure. Right? On the other hand, we have what is known as a reversal breakout structure. And as the name suggests, reversal. This means that the market usually change whatever trend it's in. So if the price action was moving upwards in a uptrend and a breakout structure occurs, a reversal one to be specific, then we're looking for the market to start move in a downwards fashion, start a downtrend. With this example, as you can see, the market was pushing down, creating lower highs, lower lows, lower highs, lower lows, right? Up until we reach this point where the market took out this high. So at this point was when the market actually broke structure. And this breaker structure caused a reversal and a new trend to start pretty much, right? New trend to start. So we break structure from down here, taking out this lower high, market pushing from low to high, pulling back, creating support to the level, also higher low, pushing up, creating higher high, and a new trend normally start after a reversal breaker structure. But as you guys can see, prior to us reaching a reversal point in the market, it was maintaining a continuous break of structure at over this point, right? So we're taking out lows, pushing lower up until we reach this point when we encounter a reversal break of structure, right? So those are some illustration just running through the example of the types of breaker structure. Now I'm going to go on the live chart and try to identify some of these same examples, right? All right. So just if we should take a look at the chart. At first glance, we're just putting examples left, right, and center of both example using the breaker structure. So if you notice right here, we can clearly highlight that the market is in a downtrend, pushing from highs, lows, lower highs, lower lows, pushing up, lower highs, boom, higher low, lower high, or we can say equal high, pushing down, creating one lower low. So in order for the market to push from here to down here, notice we took out these structure. So these areas where the market was rejecting to the downside, finding support, causing market to push up, right? In order for the market to reach down here, we had to take out these structure right here, right? So if we should extend our rectangle, to the right, we can see this was a continuation breaker structure because the market pushed down and we pull back to retest the support, create resistance, and we push down. Right? Market continue in its original trend. So this is an example of a continuation breaker structure. Right? And we see many other examples as we go along. Right? Right? So right here, we notice that the market was still maintaining its downtrend, lower highs, lower lows, pushing down, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, and then lower high, started creating a higher low, and then we push up, creating higher high, pull back for the retest. So at this point, what we experience at this point, if it gets a reversal breaker structure, then that's correct. Because what? At this point, the market was moving in a downtrend, right? And right here, the market push up, taking out these structure to the left. These what previous highs where we found resistance, right? So we're now above that area. So now we want the market to stand on that area, stand on that level, form what support, right? Support. And from there, we're looking to take price higher. So as long as the market pull back and it maintain, that is a reversal break of structure, right? So this is a good example right here because after that happened, what? Push to a higher high, higher low, higher, higher, higher low, and a new trend just start, right? So let me look for two more examples because the concept is pretty straightforward, guys, right? Pretty straightforward examples. All right, with this example right here, as you can see, the market pretty much created these higher low points. That was a high, push up, creating a higher high. The market pretty much pulled back for the retest, right? Right along here, pull back for the retest. Then what happened next? The market created this higher low point, also support, push up, higher highs, then what we pull back, retest this level. So we notice we have this. This also counts as a zone because this was what the market actually came back and reacted to this lower high point right there. Right? So the market pulled back, tap into the area, and then we push. So this again, these are example of continuous or continuous or continuation breaker structure, right? Because the market, in order for the market to reach up here in the first place, we had to pretty much take out some structure. Where find those structure? All of these levels. So all of these lower highs right here. We broke these structures for the market to reach up here. The market pulling back, retesting these levels for us to continue the push in its original trend. All right. So the overall trend didn't trend, but we still break structure to the upside and we maintain. So continuation breaker structure. But once we start a new trend from that breaker structure, just like over here, then we have what is called a reversal breaking market structure. All right. We take out low at this point, pull back, reject, creating resistance, and we started lower highs, lower lows, started, sellers took over the market. All right. So I hope that example was clear as it relates to the different types of breakout structure in the market. And I'll see you in the next video.